More on Greece and the future of the eurozone. I spoke with Danae Kyriakopoulou. She's a senior economist for the Center for Economics and Business Research in London.
The way this could unfold is that if, in the wake of a no vote, the creditors maintain their hard stance and refuse to make a new deal with Greece, then the government would run out of funds to pay the European Central Bank in July. And it would be very hard for the ECB then to maintain ELA, emergency liquidity assistance, to Greek banks. So we could see a default, we could see Greek state running out of money to pay wages and pensions. And that could quickly escalate into it issuing a form of IOUs to run the state. And this then would mean that Greece would lapse into having to form a new currency. You can call it the drachma or anything else.
Yeah, so it sounds like there's two issues here. One, they still have ties to the ECB. They're still, in the banking system, for lack of a better word. They still have to pay back the debts. And then you have this other issue of forming a new currency, essentially, from scratch. Even though they've had a history of it, it still has to be sort of recreated again, and then you have to value it. The transition that would be, how long would that take if it happened?
I think a lot of people are speaking about Brexit as if it's one event that could happen overnight. It's actually a process. So the steps through which this could happen would be with the Greek government not having the funds to run its obligations, such as paying pensions and wages, issuing those in IOUs in a form of virtual currency. You wouldn't need to call it a new currency yet. But as people expect that this would be depreciated over time, they would hoard the euros that they already have, or whatever is left of those, and the economy would work on this new scrip currency. So the bad new currency would drive euros out of circulation, as people would keep them under the mattress for future uncertain times. So it's something that would happen gradually, with the bad currency driving out the euro.
What would happen to the euro, though?
Well, if Greece was forced or happened to leave the euro, I think initially we would see a depreciation in the euro, because what happens is that markets' expectation of the euro will change. The euro was formed to be a permanent, irreversible monetary union. Having one of its members leave is a game-changing event. It raises concerns of what would happen when one of the other economies is in trouble next, such as Spain or Italy. So it's a game-changing event, and that's why we would see the euro depreciate.
Here's one thing I've heard. So the euro is relatively strong, and if a drachma or a drachma-like or even a virtual currency was introduced, it certainly would not be at the same strength as the euro. Therefore, all the debts that are still owed to these partners and European countries, that still stands, but now you've got a lower valued currency at home. What I'm trying to say is that would they end up basically owing more money to the rest of the partners that they owe, the creditors?
That is correct. A new currency in Greece would be substantially devalued, but that would also be coupled with default. So I don't think we would see Greece repaying this debt.
So they would never. So we could expect them to never. If this happened in this scenario, they would never repay the debts to the IMF, to the euro, to anybody for that matter.
That is the reason of why they would issue a new currency, to start from zero, essentially.
Now, some would argue that this could be a good thing for Greece, right? Have a new currency, a lower valuation. Tourists would flock there because it'd be the best bargain in the history of Europe, probably, at least in the short term. I mean, is there any silver lining to this, that it actually might be good for Greece?
That is a textbook economic argument in favor of devaluation, that's right. But I think in the current situation, it doesn't really apply. You mentioned tourism. Well, the tourist season is already over in Greece right now, and actually the whole uncertainty that we've seen has impacted it very negatively. So even US citizens are going to Greece, and they can't withdraw money because there's such long queues at ATMs. They're afraid of holding cash around, given the crime rate. So I think it's having a negative impact on tourism. And even if we see a devaluation and Greece is a strong bargain for tourists next year, I think the reputational effect that we've seen from this year will limit that. And it's hard to expect that to be the hope and the silver lining when it's so uncertain.